focus on one other point here with this whole euro crisis. You mentioned that the ECB is buying the bonds by the truckload, but the banks are still dumping them by the boatload. Um, let's make sure our listeners are aware of the Fed's role in all this. They're not just sitting around and watching Europe's collapse, are they?
No, they're doing a lot. Well, first of all, let me preface by reporting a particular story. It didn't really get legs, which tells me that it might have been true. You can't say that if a story fades, therefore it's false. No, it just gets pretty much buried. But there were a lot of reports a couple months ago that Wall Street firms were using an exotic trade based on funding from Japanese yen. Notice they've got a near 0% interest rate. So funded by the Japanese yen, they were shorting European sovereign bonds and shorting the euro. So that worked out very well for them, if that's what they did. And I suspect that's what they did because Wall Street's got their fingers in all kinds of pies. The Fed is not standing by, as you say. That's very true. What they did in, I think it was the first week of December, they announced a $1.2 trillion lending facility. So, it's ironic. You'd think that all this monetary inflation would lift gold. But what happens is the central banks say we're going to lend a lot of money, and that enables the big European banks to borrow dollars to satisfy some of their obligations that are dollar-based. But they also go out, pardon me, they also go out and borrow the money and use the money to lease gold, which has got ridiculous lease rates. I think you were pointing out earlier that 6 months went down to minus 60 basis points for a full day, and then went back up, probably a nice open window for them to lease at no cost at all, lease the gold to sell it. So the central banks are doing a lot to help this situation out by making it possible to put dollars in availability and enable leasing of gold. And you got to wonder, well, where's all the gold coming from? I thought there's a shortage. Well, there was until Greece had its problems, and they have 111 metric tons. And I think a good deal of that, not all, but a good deal of that has been made available in the gold market for leasing and sale. One of the conditions for Greek aid could very well have been you make your gold available for leasing. It won't be lost. It won't be lost. We're just going to borrow it, and then they're free to sell it. So it won't be lost, and that's the same old garbage con shell game that's been going on. The other big source of gold has been from Libya. Isn't it interesting that the London banks are deeply insolvent? Lloyd's of London threatened with death. Royal Bank of Scotland owned 60% by the British government. And suddenly Libya is declared to be a rogue nation, and Gaddafi's got to go. All right, well, I never have been a fan of Gaddafi. I thought he was a heavily medicated psychotic maniac. But, he ended up in a sewer pipe, disemboweled. He was violated from behind. He was found dead in a pipe. And Libya had to get let loose 144 tons of gold. Well, gosh, isn't it interesting that war is good for gold supply? I wonder what other despot is going to have to go in order to free up the gold. This just raises questions on the legitimacy of war itself.
Yeah.
And then
It used to be that
I could go on and on. It's so ugly, John. It's so ugly, Doc.
it used to be that it said what's the old quote? War costs much silver, but now these days it seems to be war brings much gold.
Very good line. Yes, yes. Incredible.
I think you make that's a great point for listeners to take into account here because so much of the precious metal community currently is they're just scared out of their pants right now with gold and silver correcting and being down in the middle of this euro crisis. They're really not understanding the whole picture, and like what you just talked about here with the supply coming from these wars from Greece and their agreement to austerity measures, as well as obviously the paper rig game as well.
Well, there's another source too, and it's really not new, but it hardly is discussed on a regular basis, and it's the GLD fund, the Exchange Traded Fund. Uh, if you look closely at the prospectus, it enables the custodian to short the stock for the GLD. And with shorted shares, they're entitled to go in and grab inventory, which just sounds like a complete abomination. The custodian can short the GLD and lay claim to inventory. It has a huge short interest right now. So that has been a backdoor supply of other gold. I firmly believe, and I've said this now for 2 years, there will come a day when the gap between the GLD share price and the physical gold price widens so badly that calls of corruption come and lawsuits come, and then the GLD is shut down. Then everybody's going to realize the GLD really doesn't have much gold left. You know, it's great to say, oh, I sold my IBM stock, I sold my Google stock, I sold my Walmart stock, and I'm buying some gold with GLD. Well, you're not buying gold at all. You're buying certificates that enable them to short gold. It's really quite ugly. I think there's another phenomenon that's very important in the gold market to keep in mind right now, and that's a divergence. I wrote about this in a previous article a few weeks ago. I used to write one every week, but you said I have a weekly public piece. Boy, I wish I did. I get a little tired. I've been doing it now every 2 weeks. He's not an American citizen, and I said, if you don't mind, what are you seeing for the prevailing physical gold price as we're at 1720 or 1730 right now on the supposed price discovery out of Comex? And he said, well, you have to pay very little attention to Comex. It might show 1730, but I could show you lots and lots of sales in the multiple millions of gold in the 1950 range. So there was a $200, $230 premium for physical. And I think this divergence is going to be much bigger as time passes on. The physical price is not coming down as much as the Comex price. I don't think they've got a whole lot of gold. And, if you want to talk about sources of gold, you have to talk about alleviating some of the demands for the Comex gold. I like to say that you had several hundred, if not thousands, of people lined up at the window of Comex in very early December awaiting their delivery, and instead they had their accounts all stolen. So that really helps to keep some of the supply. And if you look at some of the data, you'll see, and I'm not sure, I think you might have pointed this out, that 615,000 ounces of silver was demanded for delivery in very early December, 615,000 ounces, but 618 or vice versa showed up suddenly in the J.P. Morgan account.
That's just coincidence, right?
Yeah, you could say that, or you could say it's a smoking gun. So, there's really not much legitimate or honest or, integrity. There's not much integrity in the gold market anymore, and it's becoming widely known. So you've got several different unusual, suspicious sources of gold, and you got a divergence. I fully believe that that this MF Global impact is going to be isolation of the Comex, and eventually it's going to shut down and become a cash market. It has to happen. I mean, where are they going to get their next big supply? Another war? Another MF Global? I don't know. It's becoming precarious, and the cartel for gold must be applauded for having extended this market for this long.
I'd have to
I thought back in '05 that they could never get to 2010, but they did. It's 2012 now.
Yeah, I thought back in 2008. I didn't think they'd make it through 2009. They've
Yeah, well, They did, and there's nothing better than a crisis over there to make the dollar look good, wherever over there is. I mean, they've got a balancing act here, Doc. They're trying to limit the economic strength for demand, like for oil. They're trying to limit the economic strength for demand of whatever commodity, like say copper. And if they can limit the final demand through economic weakness, they believe that they can keep a lid on this and not enable price inflation from getting out of control. The horse is running wild out of the stable. And what they're risking here instead is the financial centers collapse, like a string of banks fall down. I think it's going to happen. I think it is happening. You wouldn't believe what some of the things going on behind the scenes, like strange sources of money keeping Bank of America afloat.
I thought that was pretty obvious, just as was it a few weeks or a month back when Bank of America probably finally broke that 5 handle, and like instantly they were just levitated back above 5, held there. I mean, it just reeked of
Well, Warren Buffett had a hand in there, and it's hard to pull for Warren Buffett when it seems like he goes after rescues of some of the most vile, ugly, toxic-ridden, fraud-ridden entities like Goldman Sachs and Bank of America. If truth be known, narcotics money laundering money, those funds are keeping Bank of America afloat. Even the United Nations reports have attested to that. So, this is the whole, I think Eric Sprott said last week, the whole financial system in the West is a farce. And it's becoming recognized as a farce. And we're just pointing out, the broken pieces in Europe and the corrupted markets in the market with gold. There's really not a single financial plank that's clean. And people have to react to that. I think people are going to have some serious wake-up calls this year. I don't think MF Global is an isolated event. I don't think private account confiscation and vanishing acts are done. So gold and silver, I think, are the ways to go to protect yourself, and there'll be a tax on gold and silver too. So, Doc, we live in pretty dangerous times. And they're not going to get safer. They're just going to get weirder, more dangerous and weirder.
Yeah. And so a little while ago you mentioned that the world financial system will not survive in its current form. And I think in your U.S. Dollar Paper Tiger article you said the same thing. And in that piece you said that you expect, I'll read your quote here, a collapse is due probably by late 2012 or early 2013 after the U.S. presidential elections. So I guess my question to you then today, Jim, here, if the financial system, in your opinion, is going to fail to survive past 2012, right now, today, what we're seeing today, is this likely the last major correction or entry point to accumulate physical precious metals such as gold and silver?
Again, it's really hard to know. Will there be another foreign nation and a despot that falls? Does Syria contain a lot of gold? I don't know. How much gold does Spain have? If they go bust, will their system disgorge a tremendous amount of gold bullion? I don't know. It's very difficult to know. But what is assured for me, and this is the point I like to keep stressing, what is assured is that the paper price from Comex is going to become increasingly irrelevant because there are going to be fewer and fewer participants in that market. So the dominant market will be the physical, where you call up, some of these traders who have billionaires as clients, and you say, well, what's the prevailing price? There'll be a time when Comex is going to be like $300 lower than actual physical trader prices for, good, substantial physical